So, good morning. At least it's good morning here in London, where I am. Um, the panel that I am about to moderate um, is on, I think, one of the most fascinating questions, both in economic policy and in climate policy, which is climate finance. How far will or should central banks go? Is it really their main job to protect the financial system for which they're clearly responsible from the impact of climate change or the impact of policies to mitigate climate change? So that's a direct responsibility. Um, is it alternatively their job actually to go out and have climate policy, to implement climate policy, uh, to reduce climate risks because they're so enormous? Central banks too have to be an instrument of state policies. And third, what conflicts of goals might these different obligations create, particularly between the first, to protect the financial system from climate risks, broadly defined, and the second, which actually to implement climate policy. Um, to discuss these immensely important questions, we have a really first-rate panel, which consists of Thomas Jordan, who's chairman of the governing board of the Swiss National Bank, um, Klaas Knot, who's governor and president of the Dutch Central Bank, um, uh, Fundi Chatsibana, who's deputy governor of the South African Reserve Bank, and finally Ignazio Visco, who's governor of the Banca d'Italia. So we have a very wide range of experience and background, and I'm looking forward very much to this discussion. So I'd like to start with the question I started off, or the questions I started off with, which are, or two of them. What are the legitimate objectives of central banks in relation to climate finance? How much of it is, as it were, prudential, broadly defined, and how much of it is actually prudential vis-a-vis finance, and how much of it is actually to implement climate policy on behalf of the state, on behalf of society, on behalf, indeed, of the world. Um, and I'd like to start with you, Klaas. What is your view? What indeed is the ECB's view on this?
Yeah, thank you, Martin. I guess it's fair to say that climate-related policies and climate-related risks are going to have an impact on the ECB's mandate along multiple dimensions, and that's why central banks do have a legitimate interest in managing climate-related risks and making sure that actually we can make successful energy transition. If you look at our mandate, first, of course, our primary mandate is price stability. But it is arguable, I think, that the inflation process will also be affected by the energy transition that our economies will have to undergo. There will be demand and supply shocks. There will be relative price adjustments. Think only about the importance currently of oil prices in inflation. That will change, of course, going into the future. So we have to adapt our analytical apparatus to that. And so from our primary mandate, I would say that managing a successful transition will be a prerequisite for also for us to maintain price stability at lowest cost. The challenge, of course, will be that these climate-related challenges will play out on a much longer horizon than the typical horizon at which we assess inflation, the medium term. And that's a thing that we still have to think about, and that we are also currently thinking about in the strategy review, actually. But next to our primary objective, we also have a secondary objective of supporting European Union policies. Well, one of the policies is environmental protection. That's squarely within the domain of the European Union. And as a central bank, in our secondary objective, we have to support such policies. We don't have to create such policies, but we have to take the policies of the Union as a given and look where we can support these. Well, one of these examples that's often been mentioned is, for instance, in our investment policies, that our investment policies are consistent with a net zero objective in 2050. The corporate securities purchase program that we have, there's a debate on whether the definition of market neutrality that we're using there is not heavily skewed towards fossil intense industries, and whether we should not tilt it toward a more green composition. Well, that's something that we should absolutely consider. My preference would be for us not to come up with an allocation ourselves, but that there would be a somewhat better benchmark developed outside the central banking world that we could then use to tilt these purchases under the corporate securities program. Then thirdly, we also have to protect our own balance sheet. We are engaged in financial transactions with counterparties on which we assess the credit risk, and also their credit risk profile will of course be affected by climate related risks. And we would want in our risk assessments to take that into account. To the extent that we make use of credit ratings, we would want rating agencies and their methodologies to take it into account. A lot of these methodologies still have to be developed, but I think we can have a catalytic role in there in fostering the development of such methodologies. And one aspect that I think is very crucial in this regard relates to disclosure. This is all about sort of imperfect pricing of a sort of market failure. And we can only get to a better pricing of climate-related risks once there is more data, more information out there. And that's why we also stimulate very much the harmonization of disclosure standards. That's something that we do through our supervisory function. But of course, we could also apply the same disclosure standards also to the counterparties that we deal with from our traditional central banking function. In that context, there is the task force on climate-related financial disclosures by Mike Bloomberg that has already set out a certain standard there. I think it is a global public good that we try to bring about as much harmonization around that standard, and that we try to avoid as much as possible fragmentation, that different regions and different jurisdictions would go in a different direction there. And that's why we very much support also the IFRS's efforts to set up a sustainability reporting board and to bring about as much harmonization as possible there. So these are, I think, the main areas where I see central banking being involved. Just a caveat to conclude. It sounds all very much impressive, but we shouldn't be tempted to think that we are the primary actors here. The primary actors are really the governments, and the most effective measures in order to bring about or to manage the climate change are, of course, instruments in the hands of governments, like a more accurate greenhouse gas pricing, carbon pricing, but also public investments in those areas where the government can actually accelerate the greening of our economy, and also in the context of COVID-19, the greening of our recovery. So let me conclude here.
Martin?
We cannot hear you, Martin.
Yeah. You've set out a pretty complete agenda, which is very helpful for our discussion. So Fundi, from your point of view, does what Klaus says sort of also cover the way the South African Reserve Bank is thinking about this, or are there important differences in your approach in the political context of a developing country with the particular social and economic problems you have?
Yes, so very much similar in the thinking and the approach, but I do want to raise one political economy type consideration that an emerging market central bank would be faced with. So among emerging market countries, there has been this debate, and it has been around for a while, regarding whether climate has to be a priority relative to the challenges that emerging market countries face. The challenges relate to income inequality. The challenges relate to high levels of unemployment. And these debates are something that would color the conversation around the role that is played by central bank. And often it's argued that the most important role and contribution that central banks can make in emerging market countries would be to ensure that they focus on their primary mandate, that they keep inflation in check and anchor inflation expectations, that they focus on deepening financial markets and maintain price stability. Uh, in terms of the way we think about this in the South African Reserve Bank, is that there are some complementarities when one starts to think about the impact that climate change has on price adjustments. So Klaus already touched on this. So there is a direct implication for inflation, for monetary policy, when one begins to consider the fact that a lot of emerging market countries do depend a lot on weather-dependent sectors, such as agriculture, tourism as industries. So there are some related areas in terms of how one thinks about climate change and the impacts that has directly on the central bank and central bank policy. Emerging markets are also countries that have less policy space relative to advanced economy countries. So when we have a discussion around climate change and climate finance, it's almost difficult to divorce completely the that relates to climate finance be channeled back into our economies, and what are the types of tools and instruments that our financial sectors would have. So I would say that those are issues that are slightly different in terms of how emerging market countries are having to deal with climate change. Having said that, I do think that it's quite important for countries to consider their own specific circumstances. So I just want to sketch the situation that South Africa finds itself in. We are not an Annex 1 country. However, we do have over 90% of our electricity coming from coal. We live in a water scarce country. So when we think about climate transition and climate change transition risks, those are risks that are very real for us, and they're risks that are going to be very real for our companies. So as a result, we have been quite proactive as a country. We've been a very active party to the COP. And we are also members of various networks. We are a member of the Network for Greening the Financial Sector. Our financial institutions are participants in the Task Force on Climate-Related Financial Disclosures. All of these are very important aspects for us to understand what the implications of climate change will be for South Africa, for us to identify clearly the potential risks and vulnerabilities, and for us to begin to gather the data and information now so that we are not caught off guard. So I think I'll rest there, Martin. Thank you.
Thank you very much. And I think it's very helpful to bring out the particular challenges you confront, developmental challenges, resource challenges, which are, as you say, different. And in this area, of course, pretty well every country has its own specific problems depending on its location, its resources, and so forth. Thomas, if I can turn to you now, how far do you feel that what has been said already covers your main concerns? An issue that I think Klaus didn't touch on, and at least not in great detail, which interests me particularly, is your role, very important for Switzerland, as the prudential supervisor of financial institutions, and supervising the risks that they must be exposed to through their portfolios has talked about that through the ECB's own lending program. And I'm interested in how far you feel you have a handle on and are developing an adequate handle on the risks that these enormous financial institutions that you are responsible for may be running in this regard. Anyway, it's over to you, Thomas.
Well, thank you, Martin, and it's really a pleasure to be on this panel. Well, as for anybody else, climate change is a very important topic for us, and we have been working intensively on climate-related issues since a long time. Now, for us, what is really key is that we are in a position to assess the consequences of climate change for our economy, financial stability, the financial institutions in Switzerland, but also, of course, for our management of our foreign exchange reserves. And everything is really related to fulfilling our mandate. So this is absolutely clear. Everything is, or with respect to our capacity to fulfill our mandate. So let me very briefly touch on those objectives specifically. Monetary policy, this is the first point, very similar to what Klaas just said before. We have to be in a position to really understand what is the impact of climate change on inflation, output, interest rates, etc., in order to conduct a sensible monetary policy. Then the second point, financial stability, the point that Martin, you just mentioned, this is very important for us. We are not alone. We have also the financial regulator, so we share responsibility here. But we have to be in a position to really make sure that our banking system is adequately prepared for climate-related shocks. And we have to make sure that these risks are also covered with capital and with other measures. Now, at the moment, the main goal is really to identify climate-related risk as accurately as possible in the financial system. This is not an easy task. So it's very important that we can develop the necessary and especially solid methodologies. We still probably need better data, we need better models, other techniques, and also we need an increased transparency. This is the point Klaas just mentioned before. So we have asked all companies in Switzerland to implement the recommendation of the Task Force on Climate-Related Financial Disclosure. We believe this is very important. And related to that, it's also important that we have an international taxonomy that helps us to improve our understanding on climate-related risk. So this is with respect to financial stability. And let me briefly also mention a few words on our investment policy. And there may be slightly difference to what Klaas mentioned with respect to the ECB policy. So with respect to our investment policy, we have two main objectives. So the first is to ensure that our balance sheet can be used for monetary policy purposes at any time. So given the monetary policy nature of the portfolio, we should not pursue any strategic or structural objectives. The second objective is to preserve the value of the currency reserves in the long term. Those risks stemming from climate change matter. They matter a lot. And we treat them exactly the same way as other financial risks. So we seek to mitigate these risks through diversification, opting for a very broad coverage of entire markets. So consequently, the composition of our equity portfolio changes quickly with the transformation of the economy. Just to give you one example, which is quite impressive. So the share of fossil fuel-related assets in our portfolio declined substantially over the last 10 years. 10 years ago, these assets amounted to roughly 16%. Today, they are only 2%. This is one point. And we are also committed to respecting Switzerland's fundamental values in our investment policy. So we do not invest in shares and bonds of companies which grossly violates the values that are broadly accepted at a Swiss societal level. For instance, in that context, we exclude companies that systematically caused severe environmental damage. Just at the end of last year, we expanded our exclusion criteria by taking climate-related issues into consideration. So we decided to exclude all companies primarily active in the mining of coal from our portfolios. This is with respect to our investment strategy. So thank you, Martin.
Thank you. That's very helpful and shows a sort of slightly interestingly different perspective, as I see it, on your role as a catalyst, if you like, in climate change, rather than adopting, as I see it, a defensive approach in this area. So finally, Ignazio, what is your perspective, and particularly when you look at the Eurozone, and is there anything that you would sort of add in any way, or a perspective you might give that complements what Klaus has said?
Yes, thank you very much. Thank you for the invitation. I enjoyed this panel and I enjoyed what I heard so far. So yes, of course, I share most of what has been said, especially by Klaus. We work together in the ECB Governing Council and we exchange views continuously on these issues. I would like to start, however, saying that we are discussing functions, a number of functions. Financials, we are responsible obviously for price stability, but we are very much engaged in financial stability. We are investors. I would also say that we are somehow a public enterprise, and we have to somehow give account of the way we behave. For example, on this, and I will start on this, public opinion is not very well informed about all the functions that central banks do. And we really do many of these functions. 16 were counted by the BIS recently. And some of them perhaps are in contrast one with each other, so we have to be very careful in avoiding conflicts of interest. But as far as being a public enterprise, at the end, we have also to disclose the way we behave. Since 2008, we adopted, as the Bank of Italy, an environmental policy. We publish an environmental report since 10 years. And at the end, we have cut at least 60% of the gross carbon emissions vis-à-vis 2010, 30% last year, mostly due to the substantial drop in business travels, and I suppose that this will not repeat, but certainly we will moderate the travels in the next few years, given the experience we had also with the way we are interacting today. The monetary policy objective, the price stability was mentioned by all, certainly by Fundi and by Klaas, is obviously the main objective that public opinion knows we have to pursue. Now, in this, there are obviously effects in the transition to net zero on both the mechanism through our measures are transmitted, and therefore we have to basically understand how our goals are modeled and how they are affected in the models we use by the changes in climate and the effects of that, both the transition effects and the physical effects. But also we have to understand whether we have really to respond to the climate objective no matter what. For example, assume that we have a large rate of unemployment and we are far away from potential output and we are reducing interest rates. If climate needs calls for substantial interventions on our part, the risk may be that somehow this contradicts the way we really are pursuing our price stability mandate. On the other hand, if the economy is running at very high capacity, what should we do? Should we pursue our climate objectives with major purchases of green bonds or not? I mean, we have always to take these trade-offs into account. I would be very prudent, really here, and I would really consider that, as Klaas mentioned, really we have secondary objectives that really are not to substitute our primary, but we also perform other functions. We are clearly in charge, as Thomas has said, of supervising both in the micro and the macro sense. In the macro sense, we have to be much more aware of the way banks are exposed to, the loans of banks are exposed to climate risks. And there are methodologies, we are working on them, we are discussing with banks, but clearly banks are somehow lagging behind. And this mostly is related with the lack of information, of data. This is one of the main reasons we are also for doing all the stress tests, on the other hand, on the macroprudential side. Obviously, we need information, we need exposures, and we need also modeling that tells us the impact, the risk, the probability that an event takes place. Now, all these calls for data and disclosure. So I very much agree with Klaas on what he said. We are, as the presidents of the G20 this year, we are pushing forward this. We are working with the FSB really to develop not only improvements in the data and in disclosures, but also trying to harmonize as much as possible taxonomy that we can use, and we have restarted a financial stability, a financial study group that works on sustainable finance, and in order really to harmonize as much as possible these efforts, we will have a conference in Venice on climate change and financial issues that in July, as president of G20. And related with the COP26, of course, that tries to put all this together. Finally, I would say a last word on the role as financial investors. We also invest our reserves. Reserves means our own funds. We have substantial own funds that are invested. In doing that, we somehow I have some different respect to Klaas. I think neutrality here is not much of an issue. As a matter of fact, we are not that neutral when in general, because we have different aversions or risk aversions with respect to the market at large. We have a longer horizon, and we cut short from a number of risks, for example, liquidity, illiquid assets, or excessive credit risks we do not take. In this sense, we have moved our portfolio recently. In the last couple of years, we have given more prominence to ESG risks. Obviously, there is an issue of data, of information, on transparency. We have to work also to improve that. But so far, we have been able to shape our portfolio so that in our equity investment in the euro area, we have obtained amazingly much better results than the market, especially in the last year of COVID risks, tilting towards somehow firms which have apparently less ESG risk has provided higher returns, 3 percentage points higher than the benchmark, and also lower volatility. So I think this is an issue that we cannot ignore. It is also obviously leading by example, but I think that we have to push. So it's not the purchasing of assets for monetary policy, it's for our own investing of our own funds. Thank you, Martin.
Sounds as though you should be going into the asset management business and running funds on behalf of the Italian public. Sounds very attractive. Fundi, I have a question which I think actually one of the audience has asked, but I think it's very relevant. It's about policy space from your point of view. And I was interested in this in a particular context. As you mentioned, South Africa is very dependent on coal. And so the energy transition away from fossil fuels is a gigantic challenge. and involves enormous investments, enormous changes in the structure of the power generation system. And of course, we've all read about the problems you've had with power recently. So where does the central bank fit in to this set of huge challenges, and what freedom of maneuver do you actually have to influence such a profoundly important aspect of your economy?
So this is something
So this is
that
for Fundi.
yeah. So this is
Go ahead.
something we've been dealing with in South Africa since around 2008. And that certainly has had a big impact in the price structure of the economy. So when one thinks about electricity generation, the one profound thing that has happened is as we've had shortages from coal, and government has started a conversation around carbon pricing. That certainly has changed the mindsets, and it's also opened up opportunities for new forms of energy to come in. So in essence, that conversation that is led by government has allowed us then as a central bank to reflect on what are the types of challenges that we have to deal with, and what can our role be. So the one important role that we play as central banks is we do, and I think it's a general trait that is there amongst many emerging market countries, that the central banks do have a lot of intellectual capacity. You have the largest concentration of economists in your country at any given time. However, one does need to play a role of coordination with government. This is not work that you can reflect on as a central bank. The first step is that government itself has to take responsibility for the structural shift that is happening and provide guidance on the
We're losing you.
managed in the country. Central of understanding and providing information of what the pricing impacts of the transition are likely to be. We have already seen over the past few years that energy pricing has been very different, and we have seen in the CPI basket that electricity has been a big contributor to what has been happening to prices. We have also endeavored to understand what is also the impact as we are bringing in new types of energy, is that increasing prices overall. But what we have found is that as the conversation around carbon pricing has taken place, as technologies have evolved, certainly we have seen the prices of renewable energy coming down lower and lower. But that is a process that has largely been led by government. As a central bank, we've provided information around what is the economy and how we can try to manage those and mitigate those. But the structural conversation has to be led by government in the first instance. Very happy as the conversation continues, Martin, to talk about carbon taxes, because we have now introduced a carbon tax in South Africa. Thanks.
That's very, very helpful. I have another question, which I think all of you in different ways have raised. Perhaps I'll start with Klaus and see if others want to add something. Climate change is a very long-term risk, and it's a very long-term process. Indeed, it's pretty clear, actually, we're talking about a process that is going to last centuries. The climate change will not stop even if we get to zero in 2050. It's quite clear that it's likely to continue for a long time afterwards, possibly many centuries, just from what we've already done. But even if we ignore that immense time period, you in Holland are used to thinking in very long time periods, in the sense you've created your country by managing the environment. So in some ways, you're well in advance of others in thinking about this. But as you point out, classic monetary policy has always been relatively short term. You haven't thought uh, about those sorts of time horizons. This is different, however, um, because some of those risks could affect the structure of your economy reasonably quickly. And some of these risks could certainly affect the solvency of major financial institutions reasonably quickly. If large sectors of the economy essentially disappear over the next 20 years, that's a pretty big thing. So, what I'm interested in is how you actually bring in that sort of time horizon into your discussions of standard monetary and financial regulatory policy, and how well you feel central banks you are actually able to do this now. Klaus, what is your view on this?
Well, I think, Martin, this is an extremely relevant question, because normally when we think about modeling, etc., we try to test our models against empirical data, and then of course we use historical data. But here,
Yes.
probably this is an example of a risk when we will wait until the relevant data points become historical data points. We will probably be too late to still manage the risk, because most of the relevant data points arguably will still lie ahead of us. So that means that some of the traditional techniques that are based on historical data are not equally applicable in this area than in other areas. And that means that we have to resort to a more qualitative, forward-looking approach, where scenario thinking will be extremely important. I mean, climate stress testing will be extremely important. And this has been the case, I would argue, in similar episodes in Dutch history. Yeah? It's good to keep in mind that 70% roughly of Dutch soil lies below sea level. We had a huge flooding disaster in 1953, when after the flooding disaster, there was a program, a national program to increase the dikes and to upgrade our water management. Well, that was also something that we had to do with a forward-looking approach. Extreme value theory is something that got an enormous boost in those years in the Netherlands, and that was a theory we used to determine sort of what optimal level of the dikes was needed to exclude the possibility of such a flood reoccurring once every, well, and then of course it depends on your risk tolerance, how many years, how safe you want to be here. But it's these kind of techniques that I think that need to be applied here. And as I always say, this is also an example that climate change is not only a threat, it's also an opportunity. If I look back on this example of the water flooding in the Netherlands, since 1953, the Netherlands developed a very thriving industry, dredging, water management, etc., that proved to be exportable all over the world. Look at who yesterday, it was one of the Dutch dredging companies that actually made sure that the Suez Canal became free again. Well, that's not a coincidence, because that's knowledge that was developed because of our long-standing fight against water and natural disasters here. And I think a similar approach and a similar mentality should also be taken with respect to climate change.
I should say that I've been thinking about this a lot. By the way, I'm old enough to have remember the pictures of that flooding, and particularly because I have Dutch family, so I remember this. But I was thinking that if you take the forecasts of climate change seriously, we're going to end up globally building a lot of dikes, and certainly around
London. One more thing, Martin, on this. The challenge for us is not to sort of keep the water from the sea out. The challenge will be to pump out the water that comes from the air to get it out of the country enough. That's a much bigger challenge. Increasing dikes is the simple part of it. The management of these extreme weather types, the pour downs, etc., that's a much bigger challenge.
Yes. So, Ignazio, is there something you'd like to add on how you
Yes.
integrate these immense time horizons and extreme risks associated with them into central bank thinking?
Well, first of all, I think that Klaas was rightly mentioning liquidity. So water is certainly very important for central banks. But this said, I think that obviously we are living in a world where finance matters very much. And there is a lot of emphasis on finance and on how we could help in adjusting the financial system to the structural adjustments that are needed in the real economy. So it's not only an issue of monetary policy; it's really a lot of. It's also an issue of regulation, financial regulation, and also trying to change the short-term mentality of intermediaries. It's not only us who have a short-term horizon, but also the intermediaries. So this is a very delicate issue, but there is excessive expectation put on central banks and on the financial system. And I would warn against that because, first of all, the climate change is reacting to the climate change risk, which are very, very large, is a responsibility, primary responsibility of governments who have both the legitimate democratic role to act, and at the same time they have the tools, because interest rates or purchases of bonds are not the proper tools to deal with the effects of climate change. Obviously, we can mitigate, we can participate. The tragedy of the horizon is something that was underlined by one of us, and certainly we understand very well that. But I think that at the end, the tools are incentives, regulation and taxation. I mean, these are the tools in the hands of the governments. So we can help in the design. We certainly have to improve the modeling that we have, but we have also to understand that besides the exposure of the economy, of companies, and therefore banks and non-bank financial intermediaries to climate risks, besides exposure that we can measure, improve, try to understand what are the sectors which are more related, those who are at the frontier as the ones that Klaas mentioned, the others, and so on. We have also to try to assess the risk, the probability that events take place. These are more or less rare risk, if you or tail risk, which can have a tremendous effects, but we cannot really measure them easily. And so we need to have scenarios. We are heavily engaged in scenarios. The NGFS scenarios that we participate and try to consider are crucial. We are thinking of doing much more in terms of international cooperation, because this is a global phenomenon. We cannot deal with that single-handedly. We have to have a common framework to use, and we are engaged in that. So this is a response which is not a short-term monetary policy response, in which obviously if there is something that happens, we have to react, and we will try to react in the best possible ways using the art of central banking at its best. But it is really much more. We are involved in the financial regulation and structure of the system, and we will continue to have responsibility on that.
We're getting towards the end, and there's so many questions. I'll ask a question which perhaps, Thomas, you can answer very quickly or not. And the question is, could the potential shift towards central bank digital currencies and tokenization, I think you can ignore that for the moment, represent an opportunity to create novel climate focused credit instruments? And that is also linked to sort of other questions, which is sort of, is it your job? I think a lot of people seem to think that it's the central bank job to create whole new markets for climate finance. And you've talked about this. And what do you think about your role in this regard?
Well, thank you, Martin. Well, I'm convinced that sticking to the existing mandate is the best that we can do, similar to what had been said before. And I do not go into the question about central bank digital currency. I do not believe that that will be really a game changer regarding climate change. But the long-term view is extremely important, the point you mentioned before, but also that we are using the right instruments. And probably central banks are not in a position to have all those instruments. And Klaas's example about the dikes and the flooding in the Netherlands is a wonderful example. So this problem was not solved by using monetary policy, it was solved by government policy. And this, I think, is absolutely key. And when we are using the wrong instruments to address a problem that we cannot solve, I think that would be counterproductive. And in my view, one of the biggest risks that we have as a central bank is really political inaction. So when the governments are not ready to take the necessary action, especially carbon pricing, they put central banks more and more in a difficult position, and we have to take then at the end inefficient or insufficient instruments. So I think it's very important that we analyze the problems and use the most efficient instruments really to deal with climate change. And as I think everybody mentioned before, this is not monetary policy, this is really government policy. And I think we have to stress that as much as we can.
One final question, very briefly, Fundi. And here I'd like you to look at it from the South African perspective a little bit more than the central banking perspective. Do you think it is possible, with the best will in the world, for South Africa to implement effective climate policy without very substantial further assistance, external assistance of some kind? Do you feel ultimately in your national discussion fundamentally constrained in what you can do? I'm afraid we only have a minute or so for your answer, but I'd be just interested to see how constrained you feel in what is realistic for your country, given the situation you're in.
Yes, so two things that I want to flag, Martin. First, there are things that we can do ourselves as a country that have got a direct benefit for us. The energy constraint that we face with right now provides us with a number of opportunities. So we already have got plenty of sun. So as we're having a problem and a challenge with coal, we do have a direct opportunity that is in front of us of already taking steps to change the types of technologies that we are going to be using for energy generation, at the same time taking care of climate-related risks. Having said that, there is a lot of room for climate finance. However, even as you receive climate finance as a country, you have to have a plan on what is it that you're going to change structurally, what is it that you're going to utilize the new funding for. So government still has to take a lead in terms of the structural shifts and how these structural shifts then relate to the climate agenda. So it's a two-way street. There are things that countries can do for themselves directly, but at the same time, we have to recognize that we have some funding countries. I think we need to have plans for the funds as they get to us. Thanks.
Thank you very much. I'm afraid I have to bring the discussion to a close. I take away from this discussion perhaps two really big points. It's been a wonderful discussion. The first big point is central banks obviously are thinking very hard about the climate issue from their perspective. And they have many responsibilities, starting with their primary one, price stability, but also others in terms of managing the financial sector in its various respects, in managing their own assets, and in supporting the policies of their governments, which compel them to think about and act in this area in many ways. And that is obviously necessary and appropriate. And it's going to create lots of problems most notably what was referred to as the tragedy of the horizon, the sheer time period we're thinking about here. The time period is so long, and it changes, therefore, one's perspective, particularly when markets, by and large, let's be clear, are fairly short term in their orientation. So this is a huge set of challenges. But the second point I would make, which came out of this, perhaps not clearly, but my fault, it should be, is that I think there are a lot of climate activists, a lot of people interested in this area in finance, but also in climate policy, who somehow think that the central bank is an instrument which will solve all the problems they have with the failure of governments to act. They're very frustrated with politics, so they think this technocratic instrument can solve all these problems. My view is that this is a profound mistake. It's a profound mistake politically because it's not their job. I'm not, by the way, I'm speaking for myself here, and because it would, of course, be profoundly undemocratic. But more important, it won't work. Central banks have powerful instruments, but there are really important policy instruments that relate to climate, tax policies, planning policy, infrastructure policy, policies to do real things in the real world, like build dikes, such a wonderful image. These rest rightly and properly in the hands of governments. So it's important that central banks support governments, and I think they're clearly showing a desire to do so, that they regulate finance. They're clearly focusing on this. But in the end, if we want these problems solved, they have to be solved by governments in conjunction with the public and the private sector as a whole. We cannot expect the central banks to emerge waving a magic wand and solving all our failures in all these other dimensions. I suspect, I'm speaking for them, that the central bankers here will agree with what I've said. In any way, it's a very strong view of mine. And I've enjoyed the discussion. I hope you have, and I return you back to the next session in this fascinating conference. Thank you.
Thank you very
Thank
much,
you.
Martin.
Thank you very much.
Amen,
Thank you.
I would almost say. Thank you.